Hello, Jim Adams here. Today I want to share with you how I made $3,000 last month selling options and using my safe option strategies. Glad you chose to join me today, and let's go ahead and get started. Welcome to the Easy Investing Income YouTube channel. Today I'm going to share with you what I did last month to nearly earn 3,000. This by far was my best month, and actually it was I probably spent the fewer number of hours and the least number of trades. So let me go ahead and take you to the next page. All right. Um, so for the month, I did 16 trades and I averaged 183 per trade and on 9 securities. I think 8 of them were stocks and one was ETF ARKK. I also want to share that I think I mentioned in my last video that I was trying a strategy where I was going to sell ARKK options every week, and they were going to be 2 week options. Well, I got myself kind of deep in the money again. Originally, I got deep in the money because it went up so quickly, and now it went down really quickly, and I found myself in the money again. And I was able to save myself by rolling, so that was one of the big themes for this month. I was not only able to roll ARKK, but I was able to roll a bunch of my trades. And I'm finding rolling and managing your trades really can make you a much better trader. I've been amazed how much more money I can make. And then at the end of this video, I'm going to share or review the trades. I'm actually going to share the spreadsheet and the actual trades and what I did when I did them. And I have actually more information now with my new journal that I'm keeping. So we'll do that at the end. So what I learned this month, again, I've been able to make good premium rolling positions. I think more than half of the trades, and I did 16 trades, and half those, at least half those, maybe more, were all rolls where I rolled the contract to a later date and typically a better strike price, and was able to pick up more premium. Typically, I always look for those 3 things. So I look for a better strike price, I look for a farther out expiration, and I always try to make premium. Early on, when I first started doing this, I did do some contracts where I took a little, maybe a slight loss to get a much better strike price, but I haven't done that since probably early in the process. And going forward, I always try to make more premium. And then I also wanted to mention that one of the things I learned is to be sure I fill in the dividend ex-dividend dates. I did have DVY get assigned on 6/10, which is its ex-dividend date. At first I thought, wow, this is one that was assigned and I wasn't aware of it. And I also thought, well, since it's an ETF, maybe it wouldn't be assigned, but that's not the case. It was assigned on its ex-dividend date, even though it's not a dividend, it's a distribution. But on 6/10, whoever was owning that contract, actually it was 2 contracts, were assigned. And I think I got it at 115, which since then it's come down to below 115. So I'm playing with the idea of buying it again. Also, I focused on doing fewer trades, but with more contracts. At first, I was doing 20, 30 trades a month, and it was becoming a little bit harder to handle. So if I found good premium, then I would do 2 contracts. I typically never went or have not gone above 2 contracts. I either do 1 or 2. For cover calls, I'm still typically doing 1 or 2. Now I do own Corning, which I will do more. I think I've done up to 4 contracts, but typically it's 2 different trades with 2 contracts. So it's not the same trade with 4 contracts. And then I'm doing a lot more vertical credit spreads and less cash secured puts. I found by doing the put credit spreads, and so let me just explain again what a put credit spread is. It's just you sell an option. So say I always like to use the example of Coca-Cola. So say Coke's at 50. Well, I sell a puts a put contract at say 45, and I gain, premium from that. But then farther out, say at $40, then I buy a contract, and it allows me to use less margin and less cash. It also allows me to, if I do multiple contracts, I can go a little bit farther out and take even less risk. So instead of doing an 80% probability, I might do more like a 85 or 90% probability. So I've not had any of the cash secured puts, or the vertical put credit spreads get assigned. Typically the only things I've had assigned have been covered calls, which DVI was really, it was a covered call that was assigned on 610. So I found that doing these vertical put credit spreads allows me to do more trades and try to do them with a little less risk. And again, I've not had any assigned, which has been kind of amazing. I'm actually rethinking the way I do those, mainly because I missed some really good opportunities, buying opportunities, back a couple months ago. I know I had a chance of getting Exxon at like 30 and Cisco at like 36, and now they've doubled in value. So for now, I'm still doing them the way I've always done them, but I may take a little bit more risk, especially for the ones I really want to own. And if there's a correction, then I'll do a little bit more risk, because again, the pricing may come down to in my mind, the market's way high priced right now. So if there's a correction, then there should be some good value, and I might want to pick up some of those stocks, because again, I'm also a value investor, and I get quite a bit of dividends. So I'm always looking for good dividend paying companies, where I can get them at a good price. Let's move this out of the way a little bit. And I moved away from vertical call spreads. I still do one. I primarily have one left, which is on Microsoft, but I'm doing far fewer of those. I feel like they're a little bit more risky, because if they get called, then for those, I typically don't own the shares. I'd have to buy the shares and then sell them, depending on what happened with the price. So I typically don't do as many vertical call credit spreads, and I'm going to do fewer going forward. So that's what I learned this month, and now I'm actually going to move on and show you what my trades look like. And if you want, again, thanks for joining me today. And if you'd like to subscribe, please hit the subscribe button. If you are enjoying this video, please like it and hit the notification button. The more people I can get subscribing, the better the channel will grow, and more people will be aware of this wonderful way to invest. So that being said, let's go ahead and move on to to my actual trades. And if you actually want the spreadsheet, I do provide each full spreadsheet at the end of each month to my patrons. Anyone who is a patron and has signed up for through my Patreon page. So let's go ahead and take a look at my trades. Okay, here are my trades for the month. This is my new journal that I use to keep track of my trades. It has a lot more information that I keep. I keep the ex-dividend date. I keep the current price when I make the trade, the date I place the trade, expiration. It's got a lot more information, and it's a lot more detailed than what I had before. Again, for anyone who's really wants these spreadsheets or wants to have access to these trades, they're available to my patrons. I actually load the entire spreadsheet just as you see. It's currently available for any of my patrons at the basic level. I have a higher level, patron level, where I will be setting up meetings where if you want to actually talk with me, I'll be having like a 2-hour meeting every week, and we can discuss trades and things and give you some feedback, or if you want to ask me questions. Of course, you can always ask me questions down below or through my blog if you want to post or send me a question that you might have. So let's go ahead and go through these trades. So the first one's ARKK, and I made it back in the beginning of May, and this was one of the first ARKK vertical puts that I did, and you can see why I did it, because you can actually make really good premium. So I made $400 and what is that, $62 for the credit side of, or the shorting of ARKK, and then I paid 81 for the farther out arm. Um, so the strike price was 111, so I was hoping it would not go below 111, and then I bought to open at 95. So if it went below 95, then I would, the most at risk was the difference between these two, which is what, 16, I guess. Yeah, 16. So I had to have $1,600 times two because I did two of these contracts. So but for one trade I did close to $400 or 380. And then next I did the covered call again, that on 5/3, which was at the very beginning of May, and I did that for a strike price of 65 and did pretty good premium wise, 109. Since it's a covered call, I didn't do any kind of a vertical spread or anything, and so I made 100, and what is that, $108? Yeah, $108. So for those of you that may not know, I have quite a bit of Coca-Cola that I inherit, so I typically do some coverage calls every month related to Coca-Cola. I I also will sell some to diversify and to lower the number of shares that I have with Coca-Cola. But you'll see in almost every spreadsheet, I definitely are selling some covered calls with Coca-Cola. Then I've got Apple. I am also trying to pick up Apple. So I learned that ARKK wasn't the best strategy. I decided to switch to Apple and try to get it at a lower price, mainly because I want to own some Apple. So I sold that on, or yeah, I sold those contracts on 5/4, expire literally in a little over 2 weeks, and I picked up some good premium, 188, and I spent 49. So you're talking about 140, I guess. Yeah, $140 total, which isn't bad. And here I started my rolling process. So here I rolled some of the ARKK that I had, and you'll notice that I rolled a bunch of these. Right now, I believe I only have two. At one point, I think I had 8 contracts, which wasn't a good strategy. ARKK, it went way up, and now it's come way down, and it's kind of recovered in the middle. It got to as high as 150. It's now like 115. So I'm going to keep rolling these to get myself out of trouble, and I've been able to do that pretty much with most trades. So so here are where I'm closing the spread, and here's where I'm opening the spread. So I moved it down to 521, and I made those trades in 5/6. So I only did 4 trades in that first week, and I probably only spent a couple hours the whole week. So you don't spend much time. This is what I love about this kind of trading. You don't need to spend a whole lot of time. I mentioned in a lot of my videos, I do market trades mainly because I don't want to be sitting and trying to get an extra couple of dollars and having to trade all day. So I'm in and out. I spend probably an hour, maybe 2 hours, maybe 1 or 2 days a week. Depending on what's going on with the market, if it's a huge up day or down day, I'll jump on and I'll try to make some trades. I also have the current price. If for these that are in red, it means they're down. So some of these were down days, and I knew I could pick things up. Here I rolled, or not rolled. I did a cover call for Procter and Gamble, and it made some pretty good premium, 112. So you can see a consensus if I can get over 100, and you can also notice how many I did 2 trades versus one. The next one, it was Intel. I did a vertical put for that, trying to pick up some more Intel, and for it I made 70 cents for premium, and 12, I guess I paid 12 cents for the farther out. So, and they're pretty close. So um, for the vertical put on Intel, I did 52.50 and 45. So it's 750 per trade, so 1,500 worth of margin or cash I would need for that, and I made again over $100, about 113 it looks like. And then I did another vertical put on Realty Trust, trying to pick it up, And these are all ones I would own. So in a way, I have enough cash to pay for that. So if that gets assigned, I would just keep it at 60. I'd be very happy with Realty Trust at that amount. The dividend I think would be close to 5%. It's something I would keep. Next one, I did another ARKK. I did another roll for it, and you can see even with the rolls. So I closed two, and these were bigger numbers, so I was trying to get out of a hole. But if you look, I think overall I made $300 on rolling that, even though you're talking bigger numbers. And let's see, it was, yeah, ARKK had come down quite a bit. So it was at 106 at that point, and if it had closed that later that week, you can see I did the trade on the 11th, and the expiration was the 14th. So it was almost $9 underwater, or you know, meaning the strike price was considerably higher than what the actual price of the stock was. So I was deep in the money, is what it's called. Then I did a vertical put for Kellogg. Again, I did two of those, 122. So I made about $100. And again, for Kellogg, I wouldn't mind owning it. So if I can get it at 62.50, and actually it expired. Most of these have expired, other than the ones I rolled to later dates. So let's move on to the next one. Apple, you can see I rolled it. So this is the one I had done earlier. I rolled it, or I closed it here, and then I rolled it out to 618, which those just expired. Apple got down to in the low 120s, and now it's back to the 130s. So these all rolled, and you can see here I actually did, how much did I make on that? I made 138. So again, for a lot of my rolls, I'm making good money. Here I rolled ARKK again, out from 521 to 820. So again, ARKK kept going down. It went here, it's 104. And even though I had rolled it to a lower value, it kept going down. I think it went down to 98. Currently, I believe it's at like 116, so it's come back. But I had to roll these, and these I still own, but they're now out of the money, which is nice. And again, if I come over here and I look, I made $244. So I probably have rolled those 3 or 4 times and made typically between 100 and 200 each time. So, and now I'm out of the money. I believe it's 116, and I have these at 107, so it's $10 out of the money. And then I also rolled calls in Corning, and these were covered calls that I rolled. And for them, for the first one, I did 143, and I just rolled it from 42 to 43, and then the other one I did it from 43 to 44, and I rolled one out to 716 and one out to 625, and actually two contracts for each of those. So again, I made, and here you can see I actually closed one of them on 621, so I just put that in recently. So rolling, again, even rolling covered calls is even easier than rolling the vertical put spreads. So I did well with those, and then I did another covered call with Coca-Cola. This one I did to 625, which today is 622, and I just rolled that one out. I'm playing with another strategy, potentially, is rolling these every time I get close to the money, and just roll them in the money, because I'm okay with selling those. These are actually some shares I do want to sell. So I'm just saying, if I keep rolling it near the money each time and keep it close to the same value, to see how I could do. So for this one, oh wait, this was a new covered call, so I haven't rolled it. I just rolled it in June and made another 100 and some odd dollars. And then the last one is Polaris, which I have a podcast I really like, and they talked about Polaris. So I decided to, and that it was a good value, so I decided to try to pick it up. And you can see I think it was at 129. So I did a put of 115 and 105. So the closer in was 115, and the farther out arm was 105, and required 2,000 worth of margin, because again, 105 minus, or 115 minus 105 is 10, and you multiply that by 2, so 2,000 minus whatever I brought in. And let's see what I brought in. It looks like I brought in about 160, just shy of 160. So that turned out to be a good trade. So all in all, I did 16 trades. I made 29.28, average of 183. So it was a good month, and I maybe spent 2 or 3 hours a week, if that. And part of that was just working on this spreadsheet to make it a little bit better. And the one thing I did want to mention is you'll notice I don't have any of these dividend X dates. So I'm currently, because I had DVY get assigned recently here in June, and so I'm going to go ahead and put in all the X dividend dates for any that are still outstanding. And then here you can see I did 3 covered calls this month. I did 6 vertical credit spreads, and I rolled 7 trades. So the majority of what I did, the one I did the most was rolling, and so I'm amazed how much money I can make with rolling. And again, this is my best month. I made 29.28. So it it's kind of amazing that I can make that kind of money. That I'm able to, in a way, bring 3,000 in, and I'm averaging 2,000 in dividends, so that really covers my budget, which typically is around 4,500 a month. So this month I made enough to actually do more investing, and maybe do a few other types of strategies. The one I mentioned a minute ago is trading Coca-Cola closer to in the money every month, and see if I can make $150 just doing that. So as always, thank you for tuning in. I just wanted to share, again, that I've got a blog and my trades are there, and I also have a Patreon page where if you need some hand holding and you actually want to have these spreadsheets, and I do have some special content out there that's not on my blog or in my videos, sign up. And I also, I will be dealing with questions there as well as on my blog. So and as always, please subscribe. I'm growing this channel. I want more people to learn about this strategy and learn that you can make good money using these safe strategies. I've really haven't had a losing trade, even with the DVY that got assigned. I still made good money with it. I think I picked it up at like 85, and it sold at 115, and now DVY has come down to below 115, so I could pick it up with what it sold at recently. So it's a good strategy. Again, I'm amazed at how much I can make. I could probably make a lot more, but at this point I don't want to take any more risk. Over time I may. So again, thanks for tuning in. I hope you have a wonderful day. Thank you.